JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 3rd of February 2021. So yep, welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a very quick look at the markets, a few of the charts, some of the charts that I looked at recently just to see how everything's getting along, some new ones. But yeah, guys, as always, guys, before we do that, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now then, guys, jumping into the charts. Now the first one I want to pick up here is the IBEX 35. I mean, I've looked at this one recently, and basically the idea that I've mentioned previously was that keep your eyes on that downside resistance line drawn from the high of the 14th of January. And as you can see, well, we had a good test of that downside line today, and although, yep, the index kind of overshot that 21-day EMA, it got halted near this downside line. So now the big question here is, can it continue to provide resistance? Initially, when I spoke about this one, I've mentioned that this is going to be my kind of main scenario for now. However, I'm going to take a neutral stand at the moment, given that given how especially the US indices kind of sparked, exploded to the upside. That's why I'm going to take a bit of a careful approach on IBEX 35. Yes, I'm going to still going to lean a little bit more towards this scenario, but only if this downside line remains intact, and if it remains, and if the price, let's say, like continues to kind of close below this downside line. If we see the daily candle closing above it, above this downside line, then yes, well, I mean, we could start considering some higher levels. But at the moment, we are at a very interesting spot. So let's see what we can do with it and how we could take advantage of all this. But for now, all eyes are on this downside line. So let's see how this is going to play out. Now jumping into Dow Jones Industrial Average, guys. So bear with me one moment. There we go. So Dow Jones Industrial Average yesterday moved nicely back above this upside line, and in a way, it kind of also closed not only above this upside line, but also above the 21-day EMA. Also, what I've mentioned to you previously, that in order for me to get a little bit more excited with, let's say, higher levels, I would like to see a daily candle kind of staying above the 30,793 territory right here, which previously was seen as a good area of support. Now it could be seen as a good area of resistance, and we can see by yesterday's candle that exactly what it's kind of doing right now. It's acting as that good area of resistance. So far, we can see that by the cash index that the price is currently balancing around the 30,688 zone, which is basically not far from where it closed. So we are above this upside line, we are above the 21-day EMA, but we're not above this hurdle. So just to be a little bit more on the safe side, guys, a nice good push above it may open the door towards higher levels. So be careful with this one, keep that in mind, but for now it is how it is. We are leaning a little bit more towards the upside on this one. However, like I said, be very careful, be very cautious, because if suddenly something changes, if this market sentiment changes to a more of a risk off one, so then yes, we could see this one drifting back down. So from the technical side, for me to get a little bit more excited with the downside, well, I would prefer to see maybe a drop below the 30,207 territory right here, and then kind of aim for lower areas. At the moment, it's a little bit of a tricky one. I'm cautiously bullish, but again, certain confirmation breaks are required first. Jumping into DXY very quickly. So dollar index is pushing nicely to the upside today. However, it's again stalling near this 91.24 territory. I spoke about this level. That's the high of the 7th of December. If you remember my previous videos this week, when I was covering DXY, I was telling you guys that yes, the fact that we broke this downside line is great. However, just to be a little bit more on the safe side, I would like to see that daily candle kind of staying above this 91.24 zone, and then we could go for some higher levels. For now, we're not seeing that. We only keep getting these little overshoots here, so also be very careful with that one. And if we do get eventually that daily candle staying above this hurdle, above this 91.24 zone, then well, I'll start aiming for that 91.75 zone, which coincides with the 100-day EMA here shown as the green line, and then we'll take it from there. Jumping into silver very quickly. So silver is, well, look at this beautiful move yesterday. I mean, to the downside. So on Monday it was popping heavily on some speculation, but kind of on Tuesday, yesterday, everything kind of stabilized and the price went down even below the level where the commodities started off on Monday. So for now, as you understand now, we are kind of neutral for the week, because today we're seeing a bit of positivity. So that's the weekly candle that we're having right now. It's well, I mean, we had a huge tail here. I mean, if it's going to stay like this, then maybe we'll see a bit of a decline going into next week. But again, for now it's too early to talk about that. Let's see how the remaining days are going to shape up. For now, basically what I'm going to do here, if we get another push here above this 27.92 territory marked by the highest point of January, then I'll go for some higher levels again. Well, at least towards this 29.86 zone or that psychological 30 mark. In terms of the downside, well, I would need to see this one, another drop below this 26.60 zone, which kind of, as you can see, continues to provide decent support. This hurdle here, if we see that daily candle remaining below this area, below this 26.60, then I'll go for a bit of a larger correction to the downside. And the reason why I'm saying correction, because we are still trading above some of these upside lines right here, and then we'll take it from there, guys. So yeah, at the moment, that's how it is. Probably it's a bit of a waiting game here on silver. However, we are very close to this 26.60 zone. If we see that another drop below this hurdle, then yes, I'll go for a larger correction here to the downside. Now jumping into Litecoin, so popping nicely. So previously I talked about this this downside line, and basically what I was saying, that if this downside line provides good resistance, this downside line is drawn from the high of the 10th of January, then yep, we could see another slide. However, I would prefer to wait for a drop below this 125.95 zone, but as you can see, we didn't get that. Instead, we got a break of this downside line here, and we also got a push above this 147.96 territory here, marked by the high of the 25th of January. So today we saw that push, this beautiful push here to the upside. If the candle today here stays above this hurdle, then yes, my next target is this 166.69 zone. However, if it drops back below this hurdle, below this 147.96, I'll take a bit of a neutral stand, because we are still above the 21-day EMA, and in a way we could see maybe a bit of a correction here, maybe a test of this 138.17 zone together with the 21-day EMA, and if all this provides good support, a nice reversal back to the upside could be possible. So in other words, if the price drifts back below the this 147.96 territory, then maybe something like this I will consider as a potential kind of scenario. In case this starts dropping back below this downside line and drops below the 125.95 zone, yep, now that's where I could get a little bit more excited with further declines. Now CAD Yen. So on this one, CAD Yen, I haven't looked at this one for quite a while, but this one sometimes is very interesting and sometimes does present itself with nice opportunities. And here, for example, we can see that the Canadian dollar, of course, is strengthening right now, including the Japanese yen, of course. But we are stalling here near this key resistance area, near the 82.12 zone, and that's the highest point of December of last year. We did get a brief kind of test here and a brief overshoot on the 14th of January, then also on the 21st of January. We also had on the 29th of January, but as you can see, every single time the barrier here, this barrier got pierced through, but we never got that daily candle remaining above this area. And the same story today. We're having a stronger push above this area, but as you can see, the bears are kicking in and driving this one back down. So that's why I'm going to continue monitoring this one. It is a very interesting pair, but again, I would need to see that daily candle remaining above this hurdle in order to get a little bit more excited with higher levels. Then, of course, what we could do after that is aim for some higher levels. Of course, if we do get that push, we could go for maybe this little hurdle near the 83.12, and then we'll take it from there. But for now, all eyes are going to be on this area, this 82.12 zone. If it continues to provide somehow resistance, then yes, we could see a bit of a decline back down. Now, in terms of the downside, to get a little bit more excited with lower areas, now we do have a bunch of upside lines here. So one of them is this right here. This one is drawn from the low, the 29th of October. Short-term tentative upside line, of course, but a slightly shorter-term one is this one. This one is drawn from the low of the 22nd of December. And if we connect these levels here, I mean, we can see that yes, we have another one, also a bit of a tentative one, because we kind of got a drop here below this area, below this upside line here on the 28th of January. But still, probably for now, what I'm going to do here is I'm going to stick to this one, the slightly longer one. Again, it's also a tentative one, don't get me wrong. I mean, it might not even let's say react to any of this, but just for that extra confirmation, basically, if we get a drop below all of these upside lines, and then let me just put this one on the chart as well. And then if we get a drop below the low of the 28th of January here near the 80.99 level, now that's where it could become very, very interesting for more sellers, because a drop below this will confirm a forthcoming lower low, and further declines could be possible. GBP Aussie. Now, haven't looked at this one for quite a while, but it did have a nice rally here from the beginning of January. As you can see, it was pushing higher. Overall, the pair wasn't a huge decline, and kind of still is, because it's trading still below the 200-day EMA. It recently just got closer to this 100-day EMA, where I can see it's currently stalling. We can see that we do have the 21-day EMA kind of curving up here, trying to push higher. However, we had similar situations here, for example, back in the end of September, also around the end of July. So don't kind of put too much emphasis on this kind of idea. If the 21-day EMA it's starting to push higher, maybe yes, we could go for some higher levels. But to be honest, I would prefer, if in the longer term, I mean, I would prefer to see this pair kind of pushing above the 200-day EMA first, and then kind of we could go for some higher levels. At the moment, it is how it is. So that's why for now, although yes, I'm going to be leaning a little bit more towards the upside in the short run, just because we are still trading above this upside support line right here, and that's taken from the low of the 7th of January, which is also the lowest point of January. If we see a correction here to the downside, or a larger correction to the downside, well, basically this upside line could come perfectly here, because we do have the 21-day EMA, which is also not far from this upside line. So in a way, it could all work out nicely here for the buyers if this area holds, and we could see a nice rebound and a push to the upside. If in case the larger correction doesn't happen and the pair starts reversing to the upside, then probably in this case wait for a push above the current highest point of this week near the 1.8015 zone, and then yes, next target is the 200-day EMA. And finally, EURUSD. So this one continues to drift lower. Everything's working out according to plan. As I mentioned to you guys this morning, that or actually from the beginning of this week, I was saying this, that if we see a drop below the 1.2059, then my next target is the 100-day EMA here, shown as the green line, which currently coincides, or not coincides, but currently sits around the 1.1980 zone. And slightly below that, we do have the 1.1924 level, which also could be a nice good target. But for that, we would need to see the break below the 100-day EMA first. For now, that's going to be my target, and let's see how this is going to play out near this EMA, because previously, as we can see here, for example, at the beginning of November, this 100-day EMA acted as a very nice area of support. So guys, that's it kind of for this session. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys. I really do. So if you want to catch my video tomorrow morning, as always, my Trader's Espresso, that's 7 o'clock GMT time. For now, have a wonderful evening and stay safe, guys. Thank you very much, and bye-bye.